The Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Well, welcome to the show, everybody.
Welcome to the show.
So we got, we're missing Frank in the studio again this week, but we have him on the phone. Frank, you there?
Good morning.
Hey,
Good
how
morning.
you doing?
I promise to be back in the studio next week.
Excellent, excellent.
Well, Frank, I can tell you one thing. We finally have some brains sitting across from me in your seat. I have my sister who's flown in from Australia, and she was looking forward to meeting you. And but at least there's some brains and better looking genes over there. Let me tell you.
Well, she is the brains of the family after all. So,
welcome to the studio, Sam. Sam doesn't want to be on the radio today, so she's just observing.
You know what's funny? She never shuts up. I don't know why she wouldn't want to be on the radio.
She'd fit right in this crowd.
You imagine putting her and Frank on the radio together? Oh my God!
You and I'd never speak, Paul.
Never.
Oh, that is funny. That is funny, Paul. That is funny.
All right, so there's a ton going on this week. We got a whole pile of listener questions to get to, but first, the numbers from March came out, Paul. How are we looking?
Yeah, so the numbers came out, and they're obviously very stagnant. We're seeing it started in October, November of last year and tailed into the start of this year, and now we're in March. We saw January down, February down, and the March numbers weren't pretty. There's some good news and bad news, but they weren't pretty. The number of sales were down 4.7%. The listings were up, active listings were up 10%. And the average sale price in March alone was actually up 0.9%, which is great to see. When we look at the year-to-date numbers, the number of sales were actually down 5.7 year-to-date in the first 3 months of the year. Active listings obviously up 14.4%. But there's only 44% of all the homes that hit the market actually selling right now. So,
whoa, what a staggering number that is.
Staggering number, and I'll tell you what sellers need to do in a second here. But our months of inventory is at 3.8, so we're in a balanced market. But like I mentioned before, some segments of the city are buyers, some segments are balanced, and some are in a slight seller's market. And the average sale price year to date is down 0.9%, which is not terrible, but it's at $670,000. Keep in mind, we finished last year at $700,000. So we're still down about $30,000 on our sale price from the end of 2025.
So before we go on to the segments, though, that 44% number, that is crazy.
Well, it gets worse. It gets worse when I go into the segments. But 44%, like people think, if I ask people off the street how many homes that hit the market actually sell, I guarantee their number would be 80, 81, 82.
Well, you asked Frank and I, and we work in this business, and we both said in the 70s.
Yeah, and it's not. So 44% of homes are actually sell. When you look at the single-family homes, the number of sales is actually down 6.7%, and only 45% of the single-family homes are actually selling, and their months of inventory is at 3.6. So we're definitely in a balanced market with the single-family homes, and their price is down 0.8% at $828,000 for a single-family home. Townhomes, the number of sales are up 3.6%, and 50% of them are selling.
Okay, a little better.
But our listings are very high when it comes to townhomes. There's lots of townhomes on the market. The months of inventory, though, is at 2.9%. So we're in a balanced market teetering toward that slight seller's market. So the townhomes are still doing fairly well, but they're actually prices down 3% at $547,000. But now we go to the Achilles heel of our market, and that is the condo market. It is not pretty in condos. Number of sales are down 21.7%, and only 34% of condos that have hit the market are actually selling, which is not great numbers. And the months of inventory is at 5.9. We're in a strong buyer's market there at 5.9 months of inventory, and their price is actually down 5.2%. So what does this mean for buyers, and what does this mean for sellers? I can tell you for buyers right now, there's more opportunity, there's more choice, there's more inventory, and there's more time to make your decision. There's no more rushing into buying a property. You can now sit and wait and look at a few, decide where you're going to go after that. Now, what does this mean for a seller, though? Because a lot of people say, okay, well, if it's a great market for buyers, it must suck for sellers. Sellers, I've said it before 18 million times, we've never been in a stronger market right now when it comes to your house has to show well. Now, if your house is dated, just make sure it's clean and decluttered and has some upgrade to it, but it has to be priced accordingly. Number two, if you're listing with the cheapest realtor right now, you are making the biggest mistake. You have to list with the best realtors in the market. You have to, because you need the negotiating, the marketing, and the skills. Number three, price is king. And we talked about it last week. $10,000 overpriced is going to kill the sale of your home.
You won't sell even 10,000.
You won't
over.
sell. So you have to make sure that you are priced absolutely perfectly. So good opportunity for buyers, good opportunity for sellers if they do the right thing. So we're not in a terrible market. We're in a bit of a challenging, stagnant market, but there's lots of good signs that we will slowly come out of this. We are seeing more multiple offers. We're seeing more listings. Like you, Greg, how many did you shoot this month?
Oh, in March I shot 38 homes, I believe. And over last March, that was way more. We were in the mid-20s last March.
Okay, so we're already, our listings are up, which...
So that reflects in the numbers.
Numbers that's what's happening in the city.
Yeah.
And now it's just, we need to get those sales going. So it's, and this is what I'm preaching to my realtors, and I'm sure a lot of the great realtors are there preaching the same thing. You need to hone on your skills right now. You need to do the little things. We're not in a market where you can sit back and wait.
Yeah.
You're in a market...
Throw it up on the MLS and hope for the best?
Yeah, you can't. I mean, you need to be dialing that phone. You need to be talking to consumers. You need to be educating consumers. You need to be doing the little things, the open houses, the things that we had to do in a challenging market has to be done right now because this is a challenging market.
Right. So, Frank, how are you finding after the numbers coming out? How's the confidence of people coming into your office looking for mortgages?
Well, we're lucky enough that we deal with a lot of clients who have maturing mortgages. And, I've been talking about it for months now where we're in a period where over the last 24 months, we're in the middle of it right now. A lot of mortgages maturing because during COVID, interest rates were at ultimate lows and everybody took advantage of it. And obviously the real estate market was really aggressive at that time. And so we're dealing with that. As far as people buying new homes, actually, most of them are feeling pretty good about the fact that the prices have come down slightly. So they feel like they're getting proper value for their home. It'll be interesting to see how, now that the April 1st has passed and now we've got the HST rebate on all the new builds, to see how that impacts people's confidence as far as specifically first-time home buyers, because we've talked about it so much where once the first-time home buyers are back in the market, that's when the real estate market tends to really pick up. And we expect the first-time home buyers will get back into the market now that HST rebate's in place. With the new builds, my worry, obviously, and the same thing as Paul, I think, is what happens to resale values when someone may have a similar home that's being built 2 blocks from them. So now does their value go down? That's the concern for a lot of people right now.
And I did a video on this recently, and I can tell you right now that there's an opportunity for new builds and for resale. First of all, the 5% is the only thing that's been firm right now, right? The HST has not been firm for first-time home buyers yet. The other 8%.
Oh, it still has not gone through?
It still has not been passed. So for first-time home buyers, when this does happen, great opportunity to get into a brand new build. And the resale market, they feel like they're going to get beat up. But let me tell you what's going to happen. Builders aren't building fast enough. Right. And so therefore, there's not going to be a lot of new builds for people to jump into. I know there's a couple builders out there because when I work for Clement Homes, I do my research on other builders. Their inventory homes is January of next year, some of them. So that's not an inventory home. So I think what people need to realize is people will need homes, and the resale homes might be the only ones that are available. And let's be honest, they come with appliances, the curtains, the eaves troughs, the this, the that. So
air conditioning.
We're
getting into that season.
It's already been painted. It's like, so there's lots of great advantages to being in the resale market as well, mainly because the new builds are building at such a slow pace, and people are like, well, the government's really pushing for shovels in the ground. I can tell you right now, because I work with Clement Homes, they're not putting shovels in the ground. It's ridiculous.
It's again, it goes back to the conversation we've had many times. The different levels of government are not talking to each other.
They're not.
Like the development charges is the big thing, and that's all municipal.
And, there was talk that they were going to half the development charges. Great. When that comes in, that's amazing. But I think, one of our questions, which I'm sure we're going to get to, is about the HST credit. And there's still a lot of gray. There's not a lot of black and white there. There's a lot of gray. But, we can obviously talk about that at another segment. But, yeah. But yeah, I do believe, though, new builds and resales, no matter what people say that it's going to crush the resale market, it is not going to crush the resale market. I don't believe it will at all.
Right. And I was thinking about it a ton this week as well, in that if being a government town, if you're working with D&D or RCMP and you're being transferred into Ottawa, You can't wait a year and a half for a house to be built.
You can't.
They want you here now.
They want you here now, and your only option might be a resale home. I mean, let's be honest. Most people are going to start flocking to the new builds, which is amazing. But at the same time, what's going to happen to the new builds? It's going to be absorbed, and they're going to be looking for some product, and the product's going to be resale.
Yeah. And that's and I think we touched on this briefly when we were talking about this a couple of weeks ago, but the builders aren't carrying scads of inventory homes anymore like they used to. They used to build whole communities and then sell them.
Well, like I do. I said I do homework on a bunch of builders for Charles, right? And there's very little inventory out there. In fact, Charles is blowing it out of the water with inventory. He's building at feverish pace. I think he has 51 townhomes that are inventory that you can get into, which is amazing.
And where are those again?
We've got them in Rockland and Russell.
Yeah.
But yeah, I mean, I do believe, though, new builds and resales, no matter what people say that it's going to crush the resale market, it is not going to crush the resale market. I don't believe it will at all.
Right. I mean, I was thinking about it a ton this week as well, in that if being a government town, if you're working with D&D or RCMP and you're being transferred into Ottawa, you can't wait a year and a half for a house to be built.
You can't.
They want you here now.
They want you here now, and your only option might be a resale home. I mean, let's be honest. Most people are going to start flocking to the new builds, which is amazing. But at the same time, what's going to happen to the new builds? It's going to be absorbed, and they're going to be looking for some product, and the product's going to be resale.
Yeah. And that's and I think we touched on this briefly when we were talking about this a couple of weeks ago, but the builders aren't carrying scads of inventory homes anymore like they used to. They used to build whole communities and then sell them.
Well, like I do. I said I do homework on a bunch of builders for Charles, right? And there's very little inventory out there. In fact, Charles is blowing it out of the water with inventory. He's building at feverish pace. I think he has 51 townhomes that are inventory that you can get into, which is amazing.
And where are those again?
We've got them in Rockland and Russell, right? And so it's he's building at a feverish pitch, but the problem is other builders aren't, right? They've been crippled for years with high interest rates and, no building going on. And so for them now to take that big risk and just build on spec before they get financing from the bank, it's just not happening. So it's there's not a lot of new builds available out there. I can tell you that right now.
Oh, absolutely. Frank, has any of the around this HST credit, has it been sort of resolved for you guys? Like, do you have some more details on how it works for you?
Not really. Like Paul said, there's a lot of gray right now. We've asked a couple of lenders maybe for us to do a Zoom call with them or a Teams call with them so that they can explain what they're going through at their end, and they've declined at this time because they don't have enough information to be able to accurately tell us what's going to happen. But that being said, Paul, I will say that I did get one agreement from a customer this week on Thursday, and they had the builder did put the HST rebate in there, but of course they put an asterisk in there saying subject to this all being okay to move forward to that effect. So the builders are doing it, and what I really like about it is that this specific builder, the starting price was X, and they deducted the 13% in a separate column, so that we had an actual number, a purchase price that we can work with, which is great for buyers because now they're qualifying on that lower amount and not on the higher amount that was our concern to begin with.
And Frank, you and I know, like, the builders should be putting it in. It is coming. I mean, it's 100% coming. It's just, I'm not sure. I mean, it's been delayed for a year now. Like, what's the delay? Like March 20th, 2025 is when we started talking about this, right? So it's ridiculous.
Hey, folks, have a question. Head over to realestateandmortgageshow.com. You can submit it there. We'll answer it on air. Or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody. Hey, Frank, with everything going on, we've been talking about like all the stuff in the world, all that kind of stuff. The bond market is really volatile. How are you advising people right now, between, 5-year fixed, variable? What are you telling people right now?
It's such a tough conversation to have because, my opinion is one thing, but, I've been wrong, not often, but I've been wrong once in a while when it comes to interest rates. So, but I mean, it's anybody's guess because it is the wild, wild west out there right now. I mean, when you really look at it, the economic data suggests that interest rates should be either very flat or coming down right now, both in Canada and the U.S. But unfortunately, this little, Iran-U.S. conflict that we have right now has driven oil prices through the roof, right, which obviously causes inflation if it continues for too much longer. And once inflation comes into play, well, then all bets are off because at that point, the bond market realizes that both Bank of Canada and on the U.S. side are not going to be able to lower prime rate. And they realize that the cost of everything is going to go up, and they need to keep inflation in check. They can't let inflation get away. And the only way to make sure that inflation stays in check is to keep interest rates elevated and not dropping them. So that's the concern. I mean, I still believe that if this conflict ends in the next week or so, then there's a good chance that oil prices will retract really quickly. We've seen fixed rate interest rates go up anywhere between 35 to 50 basis points.
Oh, that's quite the jump.
Started.
Wow.
It is quite the jump in 6 weeks. Now, prime rate hasn't changed. The likelihood on April 29th of Bank of Canada increasing prime is pretty slim. The likelihood is that it's going to remain on the sidelines and wait this out a little bit. Inflation was at 1.8. It'll probably come in this month at 2.2, 2.3, and we'll start to see that number go up if this conflict continues longer than it should. But
Frank, can we even get it?
People, they're nervous. Some people are very nervous about taking the variable because they're scared that what happened in 2022 is going to happen again, where interest rates really skyrocketed.
We'll just start to rocket without.
Well, what's the spread right now, Frank? I mean, you can't get a 5-year fixed in the 3s anymore, can you?
Not anymore. No, they're all in the 4s now, so they're still in the low 4s. Again, historically, it's not horrible. If we look over the last 7 or 8 years, they're not great. But if we look at historically, 4% isn't bad. But the 3s sound a lot better, and I really believe that by the summer we'll be back in the 3s if this conflict ends in the next week or two.
Frank, I was talking to my sister, and she was telling me that we should stop complaining because where she lives, gas prices are $3 a liter. A townhome is probably, like, she says she lives in like a small little townhome that's at least $1 million, and the cost of living over there is through the roof. Now, she lives in like paradise, so I mean, there's give and take
I'll
a little. I'll pay $3 a liter to live where she lives any day.
But it all depends on what the salaries and the taxes are. I mean, the other problem we have here in Canada, and my biggest beef right now is, the government saying, hey, like, just be careful. But they were making enough tax revenue when gas was at $1.20. Now that it's $1.75, why not give Canadians a tax break when it comes to fuel? And that will keep the inflation number down as well. So believe it or not, I think the government has a role to keep inflation numbers down if they want to, but they're choosing not to at this time. And that's what's disappointing, because if they gave back some of the tax money, reduce some of the taxes they're collecting on fuel right now, specifically diesel, because diesel's at $2.40 a liter, I saw last night. And the trucks are the ones that are delivering all the food. So you know what's going to happen to food prices, because we know the grocery stores, the big chains, are not going to take a drop in their profit. They're just going to pass that cost on to consumers. So if the government wants to keep inflation down, they can actually control that by taking away some of the fuel tax right now, which would keep inflation down.
I was driving out to my cottage with my sister the other day, and we were talking about, when the tornadoes came through Dunrobin and through Trent Arlington and that. Since 2017, we've had tornadoes, we've had 2 floods. Remember around Gatineau, up in the Bay and all that stuff? We've had 2 floods. We've gone through COVID. Now the world's going through a war. Prices have gone haywire. Like, it's been an insane 9-10 years. It really has. It's been a tough 9 or 10 years to navigate. And there's always positive. We are going to come out of this. The war is going to end. Prices are going to come back down. Food prices are going to come back down. It's going to end. But I just know right now there's a lot of people that are struggling with the way things are. I mean, there's some people who said, I can't drive anymore. Like, I can't use my car anymore. The gas is too expensive. So it's
work from home should be on the table right now.
Oh, don't get me started, Frank. Don't get me started to that crap.
No, seriously though. I mean, you know what? I mean, we went through a crisis. It was a health crisis. We're kind of going through a crisis again right now. And the way that you can help people is by maybe opening up that door to work at home a little bit while the fuel prices are where they are right now.
Paul's just shaking his head. You just opened a can of worms there, Frank.
Yeah, I know I did. I did.
That's not happening.
I know I did. Yeah. I like to work from home. I believe in it. I think that there's some employees that give you more when they work at home than when they work at the office, because it stresses them out. That 45-minute, 1-hour drive each way takes away some of their energy. And if they work from home, they've got that energy. So I truly believe.
Oh, did we lose Frank?
Oh, yeah, for some, but not for everyone, that working from home is the best thing.
Well, Frank, last summer I was driving by your house and I saw you sitting in the backyard with a pina colada in your Speedo, and you were saying you're working. Really? You were working? Come on.
Yeah, we know that's not true, so that's okay.
Yeah, because you drink daiquiris. I know. I forgot. Yeah.
Yeah.
And don't forget the rule: no naked Zoom calls, right?
Yeah,
That's,
exactly. Yeah.
Have those policies in place.
Yeah.
So, Frank, I know the biggest one of the biggest drivers in our conversation we had in the last month was the job numbers. Again, is that going to help keep that, the Bank of Canada sort of in line with rates?
Well, it's going to make a tough decision for Bank of Canada because they're going to have to look at this and say, okay, we know inflation's likely going up if this conflict continues, but at the same time, we've got Canadians that are losing their jobs, and the GDP is still neutral. So they're conflicted as well because inflation kind of drives them to raise interest rates, but at the same time, you can't do it if unemployment numbers, I mean, it's not the same as 2022. People say same thing's going to happen. I say, but it's not the same thing. If you remember in 2022, companies were starving to get employees. So the unemployment rate was extremely low and they were hiring, where today it's the exact opposite. Even services right now, restaurants, I was talking to a manager of a restaurant this week and she said that they are down about 10% on their staff because their numbers just don't work the way it is right now. So they're bringing on less people, which is, again, going to hit and look at the federal government. All we have to look at is our own federal government and the amount of layoffs that they're doing. Banks, by the way, very quietly have laid off thousands of people in the last 6 months alone. So they're starting to utilize AI. Every single bank has now commissioned an AI expert to help them become more efficient. And they say more efficient, but I say, you just want to be more profitable.
Yeah.
Oh,
what you're doing is you're cutting away jobs is what you're doing. You're taking away jobs and having AI do some of the work that people should be doing.
Well, maybe AI will answer my bank's phone faster than
right.
than they do. I know my call is important to them, but
Talking to a person. Good luck talking to a person at a bank. I mean, it takes 8 or 9 minutes to get through to a human being at a bank these days.
Oh, 100%. Have a question, head over to realestateandmortgageshow.com. You could submit it there or give us a call, 521-TALK, 521-8255. We'll be right back.